So I bought this stock Mediaco this morning, and I can show you that it has already gained 6.28%, and I'm going to show you my actual purchase history right here. As you can see, it says we received your order to buy $50 this morning at 10:35 a share. All right, that was 9:36 a.m. October 4th. It is now 12:41 p.m. October 4th, and we can see that it has made 6.28%. So I think that's a pretty good percentage to make in just a few hours. Now I could sell it right now, and that would be considered a day trade since I literally just bought it this morning. However, that is not what I intend to do. I intend to sell tomorrow morning instead. Now the thing I want to explain to you, however, is how I came to actually choose this one in particular to do this play with. That went from $10.35 to $11 in the same day. Well, here's the thing. I'm using Google Sheets to actually analyze the certain patterns of stock price changes by the day of the week, and I'm going to kind of explain how this works right now. So first thing I do is I have the symbol, which is MDIA, and I have the number of days in the past that I want to look at, which is 90 days. And if you look down here, you can see I have the dates, the open price, the low, the high, and the closing prices. Google Finance, which is provided, a free service provided with Google, I use that to pull in all of this price data. And you can go through the dates, and I have formulas to pull the day of the week over here, so you can see what day of the week we're looking at, and you can see the open, low, high, and close prices. Okay, then I have some other calculations going here. Hold off on that. I just want to point out the main things and get yourself a copy of this Google Sheet so you can try to use it for yourself. I have a link provided. And what I want to show you here is just this top section, which are the price points averages by day of the week. So looking at, just focusing on the open, this is actually the average price, the average open price on Mondays in particular. So if you were to look at this and take all of the Mondays on here, all of these open prices that were on a Monday, and you were to average all of those together, it is telling you what the open price is on Monday. Then you can see the open price average on Tuesday, Wednesday, Thursday, and then Friday. Same thing for the low, high, and the close. And when you look at that, you can clearly see that the Tuesday average is significantly higher than the Monday average. Now, in terms of actual dollars, it seems small, right? 691 versus 784 seems very small, but in terms of percentage, it's actually a bit larger, right? If we want to know the percentage, I could add something here to calculate that. I probably will, but what I'm going to do is just do it manually with the calculator. 784 minus 691 is 93 cents divided over that initial 691, and that's actually a 0.13, which is a 13% increase in price. So although this seems small, 691 versus 784, it's a 13% increase. That is a large increase from one day to the next day, like overnight. 13% average. Okay, so just keep that in mind. Now over here, I have it automatically pull in the minimum and maximum day, so you can see right away which day is highest for that price, right? That price point. Okay, so focusing on the Tuesday, the Monday, Tuesday, Monday being low and Tuesday being high for the open price. I'm going to look now at the actual numbers, because the average alone does not tell the whole story. We want to make sure, because sometimes the reason why the average can be a lot higher on one day is because there might have been one Tuesday or two Tuesdays when the price went up so much that it made the average for Tuesday very high. So I want to make sure it really is a pattern. So what I do now is I'm looking at the numbers. I can actually see the price did go up from Monday to Tuesday. Alright, so I can look manually. The other choice is to use computer code, which is actually what I do. But here in this video I'm showing you how you can look at it manually, which I still do as well. And you can see that the price is going up, 561 to 567. Right, just looking at Monday, Tuesdays. I'm going to look at another Monday, Tuesday. And again, you can see how the price went up. Right, you can see that again. Now I can scroll through and I can look at every Monday, Tuesday. I can see 689, 754. One thing I can do though to make the process easier is I will click here, select these and apply the filter, create a filter, and what I will do is click here and I will scroll down here, clear all of the days of the week, select only Monday and Tuesday, only check those two off, scroll down, click OK, and start in. Okay, I can't look at this one because there's no Monday on top of it, so I'm going to start here. Everything here now is just Monday, Tuesday, and I can just see. Went up. Okay, 645, 615. This one went down. Went up. Okay, look at this Monday, Tuesday, went up. Went up. All right. How much did it go up? You know, you can see that it's going up a significant amount each time. What I added over here that you can use as a reference is the open to open, the actual percent change in the open price. So how much did it go up? Well, here it was 22%. Sorry, that's a Monday. So I should be looking here. So I should be looking only now. I should only be looking at Tuesday. Okay, the Tuesday open to open. So here, this Tuesday, it went up to. In fact, what I can do is this: turn off the Monday, because the value is it means the day before compared to this day. So I don't need to see Monday anymore. I only need to see Tuesday right now. Okay, if I'm looking at this. Previous open to open on this Tuesday, 218.10%. Because remember, it went from, I don't remember what the Monday price was, but it went up 218.10%. Here, 6.88%. Here, 1.07%. This Tuesday, open 13.99%. So what I'm seeing here is a lot of significantly large numbers. Remember, this is overnight. 9.43%, 3.63%. Here is a loss, minus 4.65%. Here, 7.2%, 0.25, a small gain, 4.64, 8.29, 22.55. The pattern seems to be here that, first of all, nearly every number here is positive, as you can see. Only one of them is negative, right? And some people might say, oh, it's just coincidence. No, it's not a coincidence. Because I've looked at enough stocks now. I've looked at a lot. I look at the data a lot now that I have this Google Sheet, and it's more common to have, when you're looking at one particular day and you're looking at, you know, change in open, close, and all of those different price points, you usually see a mixture of negative and positive. You see some negative, some positive. They're usually like maybe 55% positive, 54 and 50% negative, or whatever. However, actually that was wrong. 45% negative, let's say, and 50% positive, and then some that are just like flat, that don't change or whatever, right? I mean, there are different possibilities, but to see so many that are positive, for so many of these to be, number one, to be positive, nearly all of them, and then the actual amounts, the actual magnitudes to be this large overnight, so many times, over and over, repeatedly, there's something going on there. There's something significant here, right? So I think I've unlocked something of a pattern in this stock that, you know, otherwise it's kind of hard to see, right? But with the use of computers and the computer's ability to pull the data together and to summarize it instantly, we're able to more easily pick up on this pattern. So because of this, basically over 90% of the time for the past 90 days, that it has increased in price from Monday open to Tuesday open. As you can see, only lost once. I said, well, I think it's a great gamble, and it really is still a gamble because there's no guarantee that it's going to happen today just because it's happened basically every week for the past 90 days. However, there's a stronger chance, I believe, of that it's going to happen, because why is it happening every single week after week? Is it always gaining from Monday open to Tuesday open? So gambling on that, buying at around open, didn't even do any, I'll admit, didn't do any chart analysis or anything. That's why I'm starting with a small amount, because I'm really testing out this approach of going based on day of the week and following stocks that have a strong pattern for the day of the week, and I'm really testing it out to see the results. So far, results have been pretty good. So $50 in on this one has made $3 in 3 hours, approximately 3 hours, 6% so far. So imagine if I had put in 1,000 on this play, I would have already made $63, because it would be 6%. 10% of 1,000 is $100. If you even make 10% on 1,000, you've just made $100 in one day. So if you've made 6% on 1,000, then you've made $60 in one day. So you see the potential here if you put more money into it, right? So of course you can also lose, right? That's why everyone doesn't just throw in all the money and just win all the time, right? Because of course you could also have lost. But the point I'm making is you can see how these kinds of percentages, seemingly small, and these kind of price differences, seemingly small, just to look at them, right, at a glance, how they actually can lead to some pretty large gains. Now the thing I'm looking at when I look at this is I'm looking at, well, how often does it gain compared to the losses? And what we saw with Monday to Tuesday is that it gained nearly every single time. It only had lost once. In 90 days, it only went down from Monday. And when it went down, if you remember, on that Tuesday that it went down, I think this was the Tuesday here. No, that was not it. The Tuesday on which it went down in open price, if I can find the thing. Actually, what I'll do is I'm going to filter this out. Again, Monday, Tuesday. Let's look at Monday and Tuesday this time. All right, the minimum. This is overall, this min, max, and average. This is counting all the different days, all 90 days. So not looking at that. I'm looking at this. Okay. So basically the Tuesday that it was negative, which for some reason I'm just not finding. Okay, because there's only one of them. I'm just going to take my time until I find it. But I remember the percentage was very small compared to the percentage that it normally gains. Or here it is. Okay, so this is the Tuesday where it went down minus 4.65%. Okay, it lost, fine. Only 5%, but look how much it usually gains on Tuesday. I'm talking about Tuesday specifically, right? It usually gains a lot more. So that 5% loss, if you bought this every Monday and you sold it every Tuesday, okay, that one time that you lost the 5%, it would not really matter that you lost this 4.65%, because you would have made, I mean, look how much you would have made. You would have made 22% overnight. You would have made 218% overnight. Sorry, this one doesn't apply. This one is Tuesday. In fact, here's what I'm going to do, and I hope this doesn't confuse you, but we're focusing on Tuesday open to open. How much it increased in open price. The open price increased from yesterday's open price on Tuesdays, right? So Monday's open to Tuesday open. That's what we're looking at here, and that's why it's called previous open to open. So on Tuesday, looking at Tuesdays, you would have made 218% if you bought Monday open and you sold Tuesday open. The following week, you would have made 6.88%. Then you would have made 1%. Then you would have made 14% overnight. Then you would have made 9. And these are all overnight. Then you would have made 9. You would have made almost 4%. You would have lost 5% here. But look how much you already made. The 5% you lost wouldn't matter. Then you would have made 7, 0.25, 4.64, 8. And then finally you would have made 23% if you round it off. So you can see clearly, because it gained so many times and so much more than it lost, the loss would not even matter. So what I look at when I analyze these is how often is it gaining compared to how often it loses. And when it's gaining, how much is it gaining? And when it's losing, how much is it losing? And that's what you have to look at. Because if it's only losing a little bit, then who cares? Okay? And especially if it's winning almost all the time. Alright, and so that's the idea. Now I'm going to select all and click OK. So that's basically it. I do plan to do more videos. I'm in the early stages of this channel. I do plan to do more videos and take more time to kind of break down my process, and also I'm going to expand and add more things to the Google Sheet. But I would like for anyone who sees the video now to start with this Google Sheet, only really focusing mainly on this, and then looking at the weekday stats, especially this section. Depending on your knowledge, you might be able to make sense out of everything here. If not, just starting with this and just looking at these average prices, and then going here and looking at the data and looking at how it changes, right? And that's really where you should start. So I want you to get a copy of the Google Sheet now, so you have this version, and as I add things to it, you'll have more and more different versions of it with more and more features in it, because there are other things that I do that are not in this Google Sheet, and I will find a way to add them because I do them in code. I don't actually necessarily do them on the sheet, but I'm going to put them on the sheet. I'm going to put some other calculations like the frequency that you can look at it, and I'll explain in other videos what those mean and how I use those to interpret this kind of behavior like we're seeing today, which is basically going to be profitable if we can buy in on it and then sell as well. So we can buy in on when it's going down, when it goes down at a certain time in the day, like the open, and then we can sell on the time of day in the day that it usually almost always goes up. It would be, I mean, that would be amazing, because if we did that for several stocks and you could do that consistently, and if it could keep working most of the time, there's going to be losses in every method. There's always going to be losses. So, but if it can work most of the time, we're definitely going to end up winning and be able to grow a portfolio over time. So this is basically what my goal is, to do this myself, test it, see how it's working with a small portfolio, as you can see, with only $100 total, but also because I only put half of the portfolio on this play, and then tonight, if anything, I'll set up another one that I can buy. Tomorrow morning, I'll buy the other half. Use the other half of the portfolio and buy again tomorrow. Also, I'm going to sell this one tomorrow and collect the profit on that, right? And so that's what I'm going to do, but starting off very small so I can really see how it works. So I suggest, if you want to get in on this, on what I'm doing, go ahead, get the Google Sheet, and you can try it yourself as well, starting with a small amount that you can afford, not an amount that you care about, but an amount of money where you don't mind having some losses here and there. So don't go put in $10,000 if you can't afford to lose, any of that money. So if you can start with $100, which is also just easier to manage, then you can just start with $100 or something like that. Or if you can start with more, go ahead. If you want to start higher, if you want to start with 1,000 or 500 or whatever, you can do that as well. So basically, that is it. I'm Mr. Mark. This is Google Sheets for Stocks. Check out the links in the video. I have contact information as well. If you want to contact me with any comments, questions, or suggestions, and you can also leave them below on the video. Take care. Hope to hear from you or to see you around on the channel.